Good morning. What a start to the day. So let me tell you, I got on here at 10 o'clock on the dot and we were good to go. Everything was up and running. And then all of a sudden, the TV is blaring. I assume it's my husband, which is weird because he knows I'm on a live and he's usually very awesome. The dogs turned the TV on. And when I went to go figure out what was going on, I muted the microphone. I came back, didn't unmute it, decided at that point that we were just starting fresh because that was a very hot mess. Not the way to start our video, not the way to start our live for the week. So I'm back. If you caught any of that, you got to experience some fun, I guess. Um, I feel like I cannot get this to work well every week. Okay. So we're live everywhere. Welcome. Hello. Good morning. Um, hi. So I will get to the chase. So first of all, I want to thank you guys for joining us. I know there's many of you that watch this on replay, and I know that because you guys DM me with your questions, your comments. I love it. Thank you. If ever you're watching this, whether you're live or on replay, and you have questions or something, you want to know more, let me know. I'm always open to helping you guys out. If when you guys watch this, whether you're live or replay, I'd love to know where you're watching from, so let me know. And yeah, if you do not know me, hi, I'm Bree. I own Bree Bears and Associates. We are a tax advising firm in Denver, Colorado. We have clients across the country. And while we started as a tax prep firm, we have really transformed and are still transforming into more of an advisory firm because we are learning that especially our business owners, our clients want more guidance. They don't just want tax prep. They really want that guidance of how to minimize their taxes throughout the year. So we're in the midst, constantly transforming that part of our business. I'm a CPA, I'm a certified tax coach, I'm an advanced tax strategist, I'm a fractional CFO. I'm all these things, which means I've passed tests and I have taken courses to get certifications. Where I really hang my hat is on my 20 plus years of accounting experience, my 12 tax seasons, my 7 years as an entrepreneur, and my almost 7 years of really studying the tax code in terms of how it is structured to really maximize tax savings if you know how to use it, and figuring out, really learning how what we perceive as a tax code built for the rich can be used by pretty much all of us. All right, my mission here is to help the middle working class use tax planning, learn to use tax strategies to cut their tax bill, take those savings and use those dollars to start building their own wealth. All right, I want them to take those dollars they save on taxes and invest in themselves, invest it in their businesses, their kids, their retirement, whatever it is. Looks different to everyone. That is my goal. All right. It's kind of a way to make more money without actually having to make more money in your business, right? You can make the same amount of revenue, spend the same amount of money, but if you're implementing these tax strategies, you can take home an extra $5,000, $10,000, $20,000 a year by, implementing some strategies. All right. So today we're talking about accountable plans. And I want to start, we will probably circle around to this a few different times, but who should be listening to this? All right. So accountable plans, when we really talk about it being a tax strategy, we're talking to the S Corp, C Corp, and partnership owners. All right. However, it is actually it's a tool that should be used by anyone who has employees. All right. So if that is you, if you're an S Corp, a C Corp, a partnership, or any sort of business entity that has employees, you should be listening and paying attention to this, what we're going to talk about today. If you're a solopreneur, it's just you, right? Or you're a single member LLC, it's just you. There are no employees and you're not taxed as an S Corp, a C Corp, or a partnership, an S Corp or C Corp, then accountable plans aren't anything you have to worry about because everything that you spend money on for the business can be just run directly through your business. All right. But if you're an S Corp, C Corp, partnership owner, or you have employees, keep listening. All right. So let's start with what is an accountable plan. All right, so we hear the term accountable plan. We've heard it used as a tax strategy. We've heard it's a way to help, repay expenses paid by your employees. If you are an employee or have been an employee, you may have had an accountable plan that reimbursed you for your out-of-pocket expenses, paid on behalf of the business. That's really what it is. Okay, it's a reimbursement arrangement used by businesses that allows them to compensate employees for expenses that they've incurred on behalf of the business without the payments being treated as taxable income to the employees. That's the key, right? Yes, we're going to get the deduction whether we reimburse them through an accountable plan or a non-accountable plan, but we don't want it to be taxable to them as the employee, okay? Because it's not compensation, it's reimbursement. All right. And so for a plan to be considered accountable, there are IRS rules that there's 3 requirements that we got to follow. Okay. One, there has to be a business connection, meaning the reimbursed expenses, they have to have a legitimate business purpose. All right. They have to be related directly to the employer's business activities. All right. We'll talk about what that can entail when we get down to qualification. Substantiation. We call this documentation, right? Employees must adequately account for the expense within a reasonable period that we as the employer will outline. The employees need to provide receipts or invoices or a detailed expense report that show the details of each expense, right? The date, the place, the amount, the business purpose. All right. We have to have documentation to prove that, yes, this was a business expense, just like we do with any other business expense that we incur. Okay. The third qualification is one that we don't encounter because we structure our accountable plans in a way that we avoid overpaying our employees for reimbursement. But the IRS does say that if an employee receives more reimbursement than the amount of expense incurred, they must return the excess to the employer. We don't set any of our accountable plans up like this, but this might be one where maybe your client or maybe your employee is going on a trip, so you just give them money and they don't spend it all. They have to give you the overpayment back. Okay. That's not very common. It's not something we ever see. But it is a requirement. All right. So if you've been here before, you know us. We talk about qualification, documentation, and reporting. So we're going to start with qualification. And again, what we want to talk about here under qualification is that accountable plans, there are 2 purposes to having an accountable plan. All right. The first one we're going to talk about is my S Corp, my C Corp, and my partnership owners being able to expense things such as your home office and business mileage on your personal vehicle, okay, through an accountable plan. Because those things otherwise are not a business expense. All right. So I'm going to talk specifically to my S Corps, okay? Because there's a few C corporations I know that are in here. There's a few partnerships, but most of you guys in here, if you're not a solopreneur or a single member LLC, your tax is an S Corp. So that's what I'm going to talk to right now. All right. So as an S Corp, okay, your S Corp cannot take a home office deduction. Okay. You as an employee do not get, reimbursed normally for your home office deduction or for your home office use. All right. The other thing that you lose out on is your business mileage on your personal vehicle. All right. Most of us, if we have a vehicle, we tend to have it in our business because we use it, if we use it more than 50% of the time for our business, we'll put it in the business, we'll, do the bookkeeping on that end of it. But if we have a vehicle, so a lot of us, this happens when we have 2 vehicles in our household. All right. Maybe I have mine that I use primarily for business. And so I have it under the business. It's totally does not apply to today. But let's say every once in a while I have to drive my husband's car. All right. That's over here. That's not in the business, but I still should get to deduct those business miles because they're still legitimate business miles and it should be an expense. So how do we do that? All right. We do that through an accountable plan. All right. And we'll talk about exactly what that looks like in the documentation step. But the qualification is you have to be an employee of an S Corp or a C Corp or a partner in your partnership. They're the weird ones that are outside there, right? Because accountable plans are meant for employees. Okay. And I know a lot of times we don't think of ourselves as employees, especially when we're in an S Corp situation, because we're the business owners and sometimes we're the only employee, the only person working, but technically we're still an employee of our S Corp. All right. So we can therefore use this accountable plan. All right. Cool thing about accountable plans, they are considered a fringe benefit. They're not a non-discriminatory benefit, meaning you can offer this to yourself as an owner without offering it to other employees if you don't want to. Okay. Um, I don't know why, if your employees are traveling for, or incurring expenses on behalf of your business, I think it's good practice to reimburse them for those things, but to each their own. The point being, you can offer it to the owner without offering it to all employees. All right. That said, you can also offer it to different groups. So maybe you have maybe you offer it to leadership and management, but not to lower level employees. All right. So you can, it's a fringe benefit that you can offer, pick and choose who you offer it to. All right. When you're a solopreneur, a single member LLC, anyone, an S Corp, doesn't matter. If you have employees, okay, you can offer an accountable plan to any or all employees. All right. This is great if your employees do incur a lot of expenses on your behalf. I'm going to sneeze. Excuse me. Okay. This is a thing we saw come forth a lot with COVID. When people started working from home, they many times were given a stipend or set up with an accountable plan to compensate them, to reimburse them for the expenses that they used from their home office, right? For their home office usage, for part of their internet, part of their phone, those things. Okay. So you can do that with any of your employees. All right. So you can do this with any of your employees. You absolutely want to do it with yourself if you're an S corporation or a C corporation or in a partnership. Okay. So what kind of expenses are we talking about? What business expenses would you be reimbursing employees for? Okay, we already talked about home office. We talked about mileage. Also, if your employees or you as an employee or an S Corp does any traveling or buys meals while they're traveling, right? Or maybe takes clients out, right? Any of those things, anything that has a business related purpose can be reimbursed under an accountable plan. All right. So qualification is simple. Got to have employees or be an employee in your S Corp. And the other requirement is you have to have it set up right. All right. And that moves us into the documentation piece. All right. So in order to have an accountable plan, it is not hard, but there are steps that you have to take in order to make sure that you are compliant and you have your accountable plan set up correctly. All right. So the first thing you have to do is you have to have an accountable plan expense reimbursement agreement form on file. All right. When you work with us, this is something we have a template for. We help you complete this. Okay. So you have to have that agreement form first and foremost. It's not something you turn in with your tax return, anything like that. It's just something you keep on file. So if anyone ever asks, you're like, yes, I'm compliant. I have my agreement form in place. All right. Then on an ongoing basis, this is the important part. This is the part that people tend to forget about, maybe not do right. Maybe they don't do it, and this is why they don't take advantage of the accountable plan. But you have to have ongoing documentation. There's requirements, and here's what you got to do. So we use an accountable plan worksheet, all right, that calculates and tracks reimbursable expenses. So we have a worksheet that we use with our clients that has a tab for home office, for calculating their home office usage. We have a tab where they can track their mileage. And then we have a tab for other expenses. All right. So one thing I want to make clear here. All right. So when you are an S Corp owner and you're setting up an accountable plan so that you can take home office and business mileage on your personal vehicle, that's all you need to track, right? Because as the business owner, my travel, my business meals should be going through the business account anyway. All right. But that third tab, that travel, meals, miscellaneous, is for if you're reimbursing other employees through an accountable plan. All right. You have to have documentation and support for every dollar that goes out through an accountable plan, just like you're supposed to have documentation for every expense that goes out of your business. Okay. All right. So how we do it is we have an accountable plan worksheet. You give it to each of your employees that you're doing the accountable plan for, and then you have in your agreement form the basis on which you do this. Most companies do it on a quarterly basis. Some of our business owners who are just S Corps, they do it annually, right? They just do it once a year. At the end of the year, they take this sheet, they do it once. If you have a bigger company and more employees, you may do this on a monthly basis, your choice. All right, quarterly is what we recommend if it's new to you and this is something you've never done, because quarterly is spread out enough that it's not an extra chore that you're doing every week or every month, but it's frequent enough that you are getting reimbursed on a regular basis. All right, you're not doing it once a year to where you might forget to do things or might forget some expenses. All right, so once a year, you take that accountable plan worksheet and all of your receipts, if applicable, and you turn it into the business and you receive reimbursement. All right, so if you have a bookkeeper, as a business owner, you're going to hand it into your bookkeeper. They'll cut you a check or they'll initiate a transfer. If you are everything in your business, then you would take the, just kind of funny because you would take the accountable plan worksheet, and you would enter it and pay yourself, right? And receive reimbursement. Okay, so the reimbursement plans through the accountable plan are deducted to the business, and they're just they're a line item. You do not, what we recommend, so this goes into the reporting, okay? We do not recommend you have a line item that says, you can have reimbursable employee expenses, all right? And you can lump everything in there. That's fine. What our recommended practice, however, is that you simply allocate those reimbursed expenses to their appropriate category, okay? So travel, meals, what else mileage or vehicle use, and home office, all right? Or that would be reimbursable expense. The caveat we tell you, no matter how you do it, okay, whether you just do one line item that says reimbursable employee expenses, that you absolutely have a subcategory called reimbursable meals expense, because just like all of our other meals, they are only 50% deductible. And where we get in trouble as business owners is we sometimes lump those meals into other sections, right? Into accountable reimbursement, into travel, into advertising sometimes. And if we were to ever get audited and an IRS agent digs into that, they're going to see that we took too much deduction on those. And we're going to end up owing back money, taxes, penalties, and interest. So anytime there are meals involved, there always needs to be a subcategory. All right, so we make sure that when we go to report it on the tax return, that it is accounted for properly. All right, so the reporting piece is just that. You're going to report it on your P&L, whether you use QuickBooks, QuickBooks Online, Xero, an Excel spreadsheet. It's going to just go into your P&L, and from your P&L, it'll be entered into your business tax return. Okay, whether that's an S Corp 1120S, a Corp 1120, a Partnership 1065, or your Schedule C. Okay, so gets reported on the P&L and then put into your tax return. All right, cool. So you guys, this is one that tends to be overcomplicated because there are a lot of moving pieces. There's a lot of things that need to be in place, but like for us, it is not like we have built the templates, we've built the processes. And so when you work with us, this is actually a very, very easy strategy for us to implement for you because we have done all the work already. We've created the agreement forms, we've created the accountable plan worksheets, we've created the instructions, we have all of it. We just have to, give it to you, show you how to use it. And it makes it really easy. Okay. So that's that. Next week I am gone. My kids are on fall break. So we are headed up to the mountains. So I will not be here for a training, but the following week, you guys, October 24th, hiring your kids. This is such a popular one. I expect to see tons of you on here live because this is one I get so many DMs and emails about. So please make sure you join. If you have kids, especially if you have kids under the age of 17 that you hear about hiring them in your business to get a tax deduction, please join me, okay, on the 24th. And then we were going to start this last week, but we decided we need a little bit more build up to get you guys there. And so probably starting in November, we're going to do Money Monday co-working sessions. All right, Mondays at 10. I might start it the last week in October. We'll see. But in a few weeks, we're going to start our Money Monday co-working sessions. And what that is, you guys, it'll be a Zoom link. You'll get on at 10 a.m. Mountain Time. The first 5 minutes will be you guys just telling me what your goal for the hour is. All right. We're always going to be doing money activities because that is one thing that we tend to not do in our business. I'm guilty as charged. I avoid the money. I avoid those things. And then I'm like, and I do what I have to do it. So I have created my own, schedule on Mondays at 10 a.m. I do my money for the week. I look, and so this is kind of an accountability thing. It's an accountability piece so we can all get into the routine of looking at our money once a week. So I will come to those sessions with a checklist. So if you really have no idea what to do, right? You're just like, okay, I'm here. I'm ready to take that step, but I don't know where to begin. I will have checklists for you to give you an idea of what to work on. So the first 5 minutes, we're going to say the one thing we want to get done. We're going to work for 50 minutes, heads down, music on, screens off. And then the last 5 minutes, we're going to celebrate what we accomplished. All right. Co-working sessions are becoming really popular in coaching groups and different masterminds as a way. It's really accountability. It's a way of getting us to do the things we do not want to do. And so many of us do not want to look at our money. So that will start maybe October 27th, but maybe the week after. So that'll start in a few weeks. Again, gone next week. I'll be back the 24th. Hire your kids. I expect tons of you to be there live. Please come join me. These are I know so many of you watch these on record or on replay. And I appreciate you, but they are so much more fun when you guys show up live and come join me. Okay. So that's all. All right. You guys have a great week and I will see you in a couple weeks. Okay. Bye guys.